December 31, 20. Then, okay, that will be all. Then the below details.
The following relevant information.
Okay. The following additional relevant information was provided. Subscription and donation consisted of subscription, Manufacturers Association of Nigeria, donations, State Flood Victims Relief Fund, then Royal Elite Brothers Club. 2. Allowance for doubtful debts included general provision, specific provision, bad debt recovered. 3. Repairs and maintenance were made up of repairs of manufacturing plants, improvement of industrial building, maintenance of delivery van. 4. Legal and professional fees included audit fee, legal fee in respect of reacquisition of lease. 5. Other operating expenses were expenses on increase in share capital, fines for traffic offense, Christmas or Eid Kabir gift to customers, embezzlement by cashiers, sundry, all allowed. 6. Tax written down values of qualifying capital expenditure as at December 31, 2020. Then 7. Additional assets acquired during the year ended December 31, 2021. 8. Unrelieved losses as at December 31, 2020 was 55.9 million. 9. Unutilized capital allowances as at December 31, 2020 was 16,155,000.
All right. So the first thing, thank you very much. So in the last class, the first step to doing this is to compute your adjusted profit, right? May 2023, question 1. So the first thing you need to do is to compute your adjusted profit. That's the first full stop. So we'll say Island Nigeria Limited, right? Computation of adjusted profit. So what the year of assessment? We'll check the accounting year. What's the accounting year? Let's check for 2021. So that's 2022 year of assessment. So we have all figures in thousand, all figures in thousand. And don't forget that to get this is simply just simply do net profit, right? How much is the net profit as per question? Net profit is how much?
26,400. 26,400.
We have 26. Right. Add it's allowable expenses. Add allowable expenses.
Oh, sorry, sir. I'm not seeing your screen.
It must have been a network, or is it the only one?
No, the question part is even big. The way you partition it, we're just seeing one aspect of the solution sheet, then the other side of the question.
Is it showing the both sides?
That's gone offset.
Now is it showing
screen is
Yes.
Yeah, it's back.
It's back. It's back and it's okay like this.
Okay, good. So we have add the salary expenses. So the first salary expenses we want to pick is what?
Depreciation.
They are regular customer. Abi?
Yes.
7.5.
7. Then what are the other items that you can easily spot here and disallow? Director's allowed. Administrative salary is allowed. Rent and rate is allowed.
Allowed.
Motoring expense is allowed. Traveling expenses is allowed.
Traveling.
Power and
allowed.
lighting is allowed.
Allowed.
Phone and postage is allowed. Depreciation is disallowed.
De-
Subscription and donations is allowed. Allowance for doubtful debt is allowed. Finance cost is allowed. Repairs and maintenance is allowed. Legal and professional fees is allowed. Operating expenses is allowed. But let's check the breakdown. Right. Now, we're told that subscription and donations include subscription to Manufacturers Association of Nigeria. It is allowable, right? Yeah. Donations to State Flood Victims Relief Fund. This is a fund created by the government, and the law provides that the donation should not exceed 10% of the allowable expenses. But if we check 4,900, it is 4,900.
It's more.
Are you sure it's more?
No, it's no more. 10%.
10.
The company is making a profit, so it's not more. It's allowable. Then we have Royal Elite Club Brothers. How much is it? 100, but it's disallowed.
That's right.
So we have donations to Royal Elite Club. How much is that?
100.
Yeah.
The next thing is allowance for bad and doubtful debt. General provision is disallowed.
Allowed.
Disallowed. General provision is disallowed.
12.
Right? Specific provision is allowable. Bad debts recovered is a taxable income, is an income, right? Then the next thing we have is repairs and maintenance. Repairs and maintenance was made up of repairs of manufacturing plants allowed. Improvement of building is allowed because improvement is capital in nature. Improvement of building, how much is it?
1,400.
100.
Maintenance of delivery van is allowed.
1,400.
Legal and professional fees, audit fee allowed. Legal fee in respect of reacquisition of leases is allowed because that's to do with reacquisition.
Allowed.
Legal fees, reacquisition. How much is that?
630.
So I think what is the difference between a reacquisition of leads and renewal of new leads?
Is both of them are disallowed. Except if the renewal is for short lease, that's when it is allowed. But renewal of lease is disallowed, basically.
Okay, sir.
So other operating expenses. Expenses on increase in share capital is disallowed. So share capital expense. Share issue expenses. How much is that? 2.5. Fines is disallowed.
Fine for traffic offense.
How much is that?
250.
Then we have customers disallowed. How much is that?
3-1.
Next one, embezzlement. Go and pray money. How much is it?
500.
Then next thing, How is tax in value? Is just for capital allowance. So I think we fitted all of this. What's total allowable? Total allowable expenses.
So why is Christmas gift and every gift disallowed?
You can do without it. You can do without it. So it's not reasonable enough for the business. Because although it's only for the businesses, but it's not reasonable enough. It doesn't pass the test of reasonability. You could have done business promotion. Let's know. What if the friends are part of the people he's trying to buy gifts for and he calls them customer?
Now, what if it was maybe a calendar?
That's advertisement. That's allowable.
Okay, sir.
So let's non-taxable income. Right, non-taxable income. So we have dividend received. Because dividend received is a franked investment income, right?
We gross up.
That's 36.
Yes.
Okay. So it's on net.
Eh?
It's on net.
Yes, it's correct. The only thing here is that either net or gross, you deduct it because it's non-taxable. So you don't need to do conversion. Do you understand? So
Okay,
whether
sir. I was thinking we'll gross up because it's
no, you don't need to. Whether net or gross, just pick it and deduct it. So just the profits
okay, sir.
or accessible profit. How much is that? This minus. So we have adjusted profit to be 51, 280. Any question?
I was thinking there was an income we saw while we were looking at those expenses. Scroll down, sir.
Okay,
No.
bad debt recovered. So bad debt recovered, though, but it has been written off before. So it's just to offset the bad debt. It doesn't show in the computation.
Okay, sir.
Any other thing?
No, that's
So next thing, so,
Unrelieved loss.
so loss relief. So with this, you have to check the question. What the question asks you to do. What the question asks you to determines a lot. So questions are just a profit. So you are done with that part. Do you get?
yes, sir.
So you have to wait where the question asks you to wait. So that's the second one. What does it ask you to do next?
Taxable
Tax
payable
pay.
for the relevant.
Two, 6, 7. We have adjusted profit. How much adjusted profit? 120, Abby.
Yes.
Less loss relief. What's the loss relief?
900.
Where is the loss relief? I can't see it. Loss relief
Number
is
8.
5,900. Wow.
Unrelieved losses. VII.
Okay,
That's
thank
already
you.
fine.
I've seen it now. 5.
Can you even absorb that?
Yeah. So plus absorbed plus relief. Right? How much is it?
51,
Cheers, yeah.
55.
28.
So you take it here. 1, 2, 2. You have unrelieved loss.
Can't absorb it.
Write it down, are you?
4,620.
You said 4,620?
Yes, sir.
The difference between the two is what?
0.
Less capital allowances.
Carry it forward.
Carry forward. Carry forward. That is English, you know. What's the carry forward figure? 16. Going for salary.
155.
Right? Right?
16.
Yeah. Then capital allowance for the year. Now, you will need to compute because we are not the actual capital allowance. So we say computation of capital allowance for 20 what? 20 year of 6 months. Is that clear? So what are the assets that we have? We have industrial building. You have none. Industrial.
Sir, please, can you go up a little bit?
Go for a little bit as in.
I just want to screenshot. Yeah, it's okay. Thank you.
Non-industrial building. Manufacturing. Industrial plant. I have motor vehicle. Right. I have furniture and fittings. And I have my total. Right. Here we have investment allowance. We have initial allowance. We have honor allowance. Right here is 0, 10%. Sorry, 15% I mean to say, and then 10%. Yeah, 10%, right? We have 50%, 25%. We have 50%, 35%, right? Here you have 25%.
Sir, we can't see. I can't see, please. Can you scroll down, sir?
No, myself, I'm like that. Right. So, like I said, this solution will update automatically. The solution will update automatically. So please, I beg you, you may just need to bookmark this this thing to avoid me sending up now. Right. Let's do 12,000. You have it here, you have it here, you have it here, you have it here, you have it here. So we have what do we have next? So we have the taxes now value. Please pay attention. Here we have industrial building, right? Are we together? 4,200. Abi?
420, yes.
What was it? 4,200, Abi? Industrial building is how much? 5,4. Plant is how much? You're not paying attention. 36.
36, sir.
Motor vehicle is how much? 25.
25.
Furniture and fitting is how much? 180.
180.
Then we have additions, Abi. We have costs. Do we have additional motor vehicle? Additional trace and
1,004.
fitting? No. Additional motor vehicle? Yes. 1,4. Additional furniture and fitting? 900.
900.
No. Industrial building, 14.
No, the delivery van is 1,4 now.
He's coming from behind. Don't worry. We'll get there.
Manufacturing plant is 1,2.
1,2.
Yeah. But then we now have an item here. Improvement of building. Right?
Okay.
That we capitalized.
Yes.
So that's the 1,4. You and this 1,4 here. It's like it's like somebody is owing you 1,4.
1.4 million.
Alright. So then we have initial allowance, right? Now let me deal with, do we have plans, a new plant? Yes. So let me deal with investment allowance first. Investment allowance is 10% of the cost of the asset. It is chargeable once in the lifetime of the asset and does not form part of the tax attendant value of the asset, right? And beginning from 2024 year of assessment, effective from September 2023, investment allowance is no longer applicable. Do you get that?
Yes,
Alright.
we do.
Yeah, I've said that. The next one is initial allowance. Initial allowance is chargeable once in the lifetime of the asset, right? In the first year the asset is put to use. So we have initial allowance rate times the cost of the asset, right? Do you get it?
210.
So you have 210, yeah, 600, 700, 225, right? So yeah, now what do you have in total? What you do is you add up the sum of everything, right? Do you get it, please?
Yes,
Then
sir.
you have annual allowance. Please, if your background is noisy, mute your mic, I beg you. So annual allowance of the old asset. Like we said, you have to be careful when the asset is purchased. Because when the asset is purchased, we determine the number of years remaining for the asset, right? So motor vehicle was purchased in 2017, so it became applicable in 2018 year of assessment. So you have 18, 19, 20, 21, right? And this is 2022. So it means it has used 4 years, and it is remaining how many years? Hello?
6 years.
It's
6
remaining
years.
6 years, right? So what do you have here is that's going to be 4,200 divided by 6. Do you get that now?
Yes, sir.
700.
700.
The building here was also bought in 2017, so you start counting size. It became admissible for capital allowance in 2018, so you have 2018, 19, 20, 21. So this 2023 of assessment, right?
Yes.
So it's also 54
Oh, yes.
divided by 6, right? Then we have the next one, plants. Plants is going to use 4 years. That's the useful life. Here it was purchased in 2019, became admissible for capital allowance in 2020. So it has used 2020, 2021, right? So it has used 2 years conveniently. Is that correct? Yeah, so are we still fine with it?
Yes, sir. Divide by 2.
Now the next, motor vehicle is supposed to use 4 years, right? But how many years has it used? 2020, 2021. So it has used 2 years basically, right? So you have 25 minus 25
3.
divided by what? 2. Do you get it?
Yes, sir.
Then for furniture and fitting, it's supposed to use 5 years. It was purchased in 2020, so it became admissible in 2021. So you have 2021 only. So it means we have, are you with me?
Divide by
Minus
4.
8 divided by 4. So you have the total. Then you have annual allowance of the new. Allowance of the new. Right? Please don't forget to subscribe to the page or to the channel, I mean. Who changed this thing now? Please subscribe, right? But then let's move on. So we have the new asset, right? We are dealing with the annual allowance of the new asset, right? Please, if your background is noisy, please mute your mic.
Hello, sir. Sorry, sir.
Yes,
Can I
yes.
ask a question?
Please go ahead.
Please, this under industrial building, the annual allowance owed is 700. I don't understand. 10% of is it not 4,200 under industrial building
Okay, so the thing here
annual
is,
allowance?
I guess you missed out in the explanation I made, but let me explain again. What I explained is that
Okay, sorry.
when an asset is being purchased, right, you have to determine how many years remaining for the assets to use. Right, what is the remaining useful life of the asset? Do you understand?
Okay.
So now the asset was purchased in 2017. So we started counting, became useful for tax purposes in 2018, right? So 2018, 2019, 2020, and 2021. So how many years has it used?
That's about 4 years.
So it has used 4 years, right? How many years is it remaining for it to use?
Sorry, I didn't start the. I don't
Okay.
know
To know the number of
number.
years an asset is supposed to use, all you just need to do is 100 divided by the tax rate.
Okay.
So it will give you 10. That means it's supposed to use 10 years, right?
10 years. Okay.
Yeah. So it has used 4 years already that we counted. So how many years is now remaining for it to use?
Sir, please come again. I don't understand you got that 10. Please, I missed it just now. I beg.
So you do 100 divided by the annual allowance rate. 100 divided by the annual allowance rate will give you the number of years an asset is supposed to use. So as I was saying,
Okay.
the asset is supposed to use 10 years, right? We agree it's supposed to use 10 years.
Yes.
Right? So how many years has it used since it was purchased in 2017?
And that is 4 years.
So 4 minus 10, what do you have?
6.
So it means the asset is supposed to use 6 years. The asset has 6 years remaining.
Okay.
So you now do 4,200 divided by 6 years remaining. So you get the remaining annual allowances.
Okay.
Do you get it now?
Okay. 4,002 divided by the remaining 6 years.
Yes.
Okay.
6
Okay.
days.
Okay. I
All
got
right.
that now.
So you can apply
Okay, that
that.
is what we determine. We will not use the 10%
No.
as annual allowance.
No.
Okay. Based on the number of years that have been used, so the remaining years, what I'm going to divide with it to get the present annual
allowance.
Okay. Thank you very much. I appreciate it.
You're welcome. So the next thing we are looking at is the annual allowance of the new asset, right? And don't forget the annual allowance of the new asset is cost minus initial allowance, right? Cost minus initial allowance times the annual allowance rate. What's the annual allowance rate? 10%. Please mute your mic if your background is noisy. We are not your customers. Do you get? Hello?
No.
It should be your network. So we have, I said, to get the annual allowance, right?
Yes, sir. Good evening, sir.
Sir, can we just finish this thing and then we give room for questions?
I don't know. This person was even calling, not even calling to me, not
Okay, you
replying
are
to me.
Doctor.
I don't know who is working up and down. Mute your mic. It's as simple as mute your mic before joining.
It's all right. Don't worry.
It's just meeting courtesy. Right, are you together, please?
Yes, sir. Yes, sir.
So good. So since we have that, so we have cost, right? That's cost minus initial allowance, right? What am I doing now? Cost.
Sir, we are not seeing your screen, no.
Is it only him?
I can see.
Sir, I'm not seeing your screen, no.
Please check your record. Check your end. Check your end. Check. Switch from end. Switch your network. So we have cost minus initial allowance times the annual allowance rate. Do you get it? So we have cost minus
Yes, sir,
initial
we do.
allowance times the annual allowance rate. So the same thing applies across board. Cost minus initial allowance and allowance rate. Yeah. So here you are adding up all the allowances together. Now, what's my total capital allowance? My total, this is what I need basically. You know these workings. So in the exam, I wouldn't, if you are in this situation in the exam, I don't advise you to add everything all together. I just need you to pick the total allowances and then run with it. Do you understand? So to save yourself some stress. So what do you have here?